Hello everyone, good morning or good afternoon as per respective time zones. On behalf of entire Mastec Managed Services team, we would like to welcome you all to 24A Finance Global Advisory Webinar session. This important session is to keep you fully synchronized with the new features and functionalities as a part of this quarterly release which Oracle provides. My name is Sachin Mishra and I am an Oracle HCM consultant at Mastec Managed Services team. So today I'm your host for this session, and I'm glad to introduce my colleague Vivek Balchandani, who is part of our vast finance team at Mastec. Today he will take us through all the cloud financial updates for 24A quarter release. Today's session is planned for around 45 to 60 minutes, and we will make sure that we also leave some time to answer all your questions that you may have. So please post your questions in chat or question panel, and we will answer them at the end of the session. So before we move to the agenda, let's have a quick look at the important disclaimer. We would like to convey you our approach towards the Oracle updates in a very simpler method. We will be taking you through vital analysis for the 24A updates done by our experts, which will help you incorporating new features and updates easily into the system. Also, we will sync you on any bugs, known issues if there are any. It's good to have an interactive session, so please do ask questions through chat or questions panel. We will answer them at the end of the session, and in case if we run out of time, we will make sure that to respond you back by connecting you at later stage to answer all your questions. So this is to give you a glimpse of how we have crafted the structure of this session. So list of new features coming into 24A, details on features, so you get brief understanding on what new features are all about. Next one is what are the business benefits and the important takeaway from you as a decision maker. So there are four components which we have done in-depth analysis of features which we are going to present to you. So first one is impact level analysis, which demonstrate the impact on the end user. If it is low impact, then regression testing can be avoided. And if it's high, then we need to opt for regression testing. Second one is which is we are all aware that there are some features which are by default auto-enabled by Oracle, and there are some which we need to opt for. Third one highlights the nature of the feature. There would be certain configurations which may be required or some can be used without any changes. Last one is a quick win. This term we use to simply convey that what is ready to use by investing minimum amount of time and what requires significant amount of time and effort to make use of this feature. So with this, now I'm handing over to my colleague Vivek Balchandani. Please unmute yourself and all the best. The stage is yours.
Yep. Thank you, Sachin, for the introduction. Hello all, myself Vivek Balchandani, and I am the Senior Consultant in Finance working in Mastec. So with this, we will start with the new features which are provided by 24A update. Let's just have a quick statistics around the all updates. So in total, we have 18 new features which have came from this particular update, out of which 12 are quick wins, which means that they are available as default and they require a minimum setup to use that particular feature. Next is 3 are opt-ins. That means to use that particular feature, one has to opt for that particular feature unless that particular feature is not available. And again, 3 are not quick wins. That means that they are available, but they require a significant amount of configurations in order to use them. So let's first start with the quick wins, which are 12 in count. So start with the first, which is coming from the common area. So this is for the service excellence continuing investment. So as we know that Oracle in each of its update work on providing greater efficiency to overall process. So within this particular update, it has came with a particular process which is called auto post, where it has provided certain efficiency, where now if you run the auto post ESS job in the Oracle Fusion, it can take into account all the ledgers for posting the journals. Whereas in earlier releases, it was just available for particular ledgers. But now, if a user has access to a certain amount of ledgers, the auto post can be run for all of them at once. Next quick win is from the area of taxes. As we can have a tax embedded compliance service for Avalara. As we know that in US entities, there are third-party vendors which are used for calculating the indirect taxes, which have integration with Oracle. Here, Oracle has come up with an efficiency to have a seeded integration with one of its tax partner called Avalara. Now, while using the Oracle, one can directly have initial configurations with this Avalara tax partner for US business and US legal entities. So this can be done through a particular configuration task known as Manage Indirect Tax Automation with Avalara. In order to have this particular task, a user needs to have two particular roles. One of them is the tax administrator role, and another one is a custom role with a BI with a category of BI abstract. Now, this BI abstract role should have a particular privilege called Manage Reports and Analytics. Once a user is having these two roles, they can get the access to a particular task which was provided in the previous slide. And once that particular is having that particular task, they can perform the initial configuration to have a connection with tax partner known as Avalara. Now, this is a screenshot typically showcasing the two roles which we have discussed. Now, there are certain points that are required in order to have this particular feature available is that this particular setup or this particular task can only provide the initial configuration to connect with Avalara. If there are certain customers which are already having this particular tax partner in place, they do not require to do this particular setup in order to avail this service, and they can continue with their existing configuration. Secondly, this particular configuration is mostly applicable to the legal entities and the business unit which are available in America. Coming to the next one, which is the third one coming from the budgetary control area, which is the purchase order with the fund status showing partially liquidated for a partial PO receipt imported into project costing. As we know that a budget utilization for a purchase requisition comes under the categorization of commitment. Then if a purchase order is linked with that purchase requisition, that utilize the fund as obligation, and once it is receipt, then the fund utilization comes as expensed. Now, since we have this particular process in place for project link PO as well, so earlier it used to happen that a project link PO was getting into expense or into a liquidated status once it is receipted. But now with this particular update of 24A, unless that particular receipt is imported into the projects module through projects import ESS job, it doesn't get into expense. And in that particular case, the PO which was liquidated earlier at the time of receipt of that PO now get the status of liquidated or partially liquidated once its cost of receipt get imported into the projects module. So unless you import that particular cost into the project module, the status of the PO doesn't get liquidated. Even that particular PO has got the receipt. Just a point to note here, this particular process is only applicable for a PO which is linked with the project. If a PO which is not linked with the project is going as it is, which is it get liquidated once it is getting receipt. This is a typical example where you can see a particular report which is having a project called build substation area, which is allocated with a budget. And now you can see in the first column, which is known as transaction type, there are purchase order and requisition as well as project expenditure. Now this project expenditure denotes that the project has been imported into the projects module. And you can see in the fifth column, The obligation and commitments are the one status which are only available against purchase order and purchase receipt, whereas the expenditure is only available against the first column of project expenditure, which means that the expenditure of this particular PO which was linked to a project will only get its status as expenditure once its cost is getting imported into the project's module and not at the time of receipt. Now, in continuation with the same particular update, since earlier when the PO was getting receipted, it was having its budget utilized as expense. So any variances that were occurring from a PO cost or PO quantity with the invoice cost and invoice quantity, they were getting utilized at the invoice level. Since now this particular cost is getting utilized once it is imported into projects, so if any particular variances occur at the time of invoices, they are not getting utilized at the point of invoice creation. Rather, they will be utilized once that particular invoice cost is getting imported into the projects module. So if a particular PO which is linked to a projects, if it is having any variances at the invoice level, the invoice will show its status as not applicable and not required. Coming to the next update, which is coming from the general ledger area, journal attachment audit to monitor and adhere to the compliance policies. Now, as we know that there is a particular feature available in the Oracle, which is known as audit policies, to take into account a particular audit report, which can capture the transactions of changes done in any particular setup or any particular transaction. In order to enhance that particular feature, Oracle has now introduced certain parameters of update, delete, and download of attachment at the GL journal level. So now, if any user is uploading any particular attachment or downloading any particular attachment or updating any particular attachment, that can be audited using the manage audit policies. This new feature will increase the governance and security within the Oracle process. Now, there are certain steps to enable that particular feature. Is that one has to go into the manage audit policy task, and there they have to select a particular business object of general ledger and subledger accounting product. And then within that particular object, they can get two drop down, which is general ledger and subledger accounting. And within the general ledger and subledger drop down, they have to choose a particular task called as journal header attachment and journal batch attachment. Similarly, in the subledger accounting area also drop down, they have to select the subledger journal attachment in order to enable this particular audit policy. Now, there are certain points to note that the audit of the upload and download of these attachment are not available at the journal GL page. Rather, they will be available in the feature called audit report under the view audit history page. And this particular feature requires two privileges, which is FND manage audit policy privilege and FND view audit history privilege. One more update is coming from the general ledger area within this 24A update, which is the legal entity specific secondary ledger with control replication from primary to secondary ledger. Now, with this particular update, we can create the secondary ledger which have a linkage with a particular legal entity and its balancing segment value. This particular feature needs a small amount of configuration where one need to enable that particular secondary ledger and link it to a particular legal entity. And whenever a journal entry is created for that legal entity in the primary ledger, it will just replicate that particular legal entity's BSV, which is balancing segment value, into the secondary ledger. Now, there are certain steps which requires to be done, which is like one need to go into primary to secondary ledger mapping task, and there they need to enable a checkbox which is replicate journals by primary balancing segment values. Then they need to select the legal entity and the primary balancing segment value. It can be either a parent primary balancing segment value or a child of a primary balancing segment value. Once this setup is done, whenever a particular journal is created for that particular BSV in the primary ledger, it will trigger a particular ESS job, which is known as replicate journals by primary balancing segment values, which will only transfer the journal entry related to that particular balancing segment value into the secondary ledger. Now, it has a benefit that it simplifies the inquiry and reporting of a secondary ledger when it only contains the data for relevant legal entity. Second is it improves the operational efficiencies of create accounting and post journal process when fewer journals are propagated into each secondary ledger. Now the sixth update, which is from the sub-ledger accounting area, which is majorly used for all sub-ledger module accounting as well as the Fusion Accounting Hub, which is like improvements to the transfer of sub-ledger accounting entries into the journal ledger. Till now, if we run the ESS job of create accounting, we have the posting of the journals at two levels. One is at the sub-ledger level and another at the general ledger level. So whenever we run the create accounting for transferring the journal entries from sub-ledger to general ledger, it directly posts the sub-ledger journal entry and transfer the journal entry into the general ledger with the posted or unposted status as per the parameters selected in the create accounting request. But now from this particular update, the users can choose to have a particular ESS job of create accounting, which will not post the sub-ledger accounting at the sub-ledger level, but it will directly just transfer the journals into the general ledger without posting these journals to the sub-ledger. By opting to this particular feature with a small setup, whenever a user is creating the create accounting request, it will not trigger the post sub-ledger journal entry ESS job, which used to be triggered earlier automatically. Rather, this particular ESS job can be triggered later onward after the transfer of the journal entries from the sub-ledger to the general ledger. Now, this particular feature has brought some more changes, which is like if the sub-ledger accounting entry references are an invalid account that has an alternate account associated with it, then it will only transfer that alternate account and leave the invalid account. Secondly, if there are any validation errors during the general ledger journal batch creation from the sub-ledger accounting entries, the valid accounting entries are only transferred to the general ledger and the invalid accounting entries are not transferred. One can review the validation error generated during the transfer of the sub-ledger accounting entries in the general ledger in the Manage Accounting Error page. Now there is a small setup in order to enable this particular feature, which is like one has to go into setup and maintenance, select the offering as Fusion Accounting Hub, then select the functional area as Accounting Transformation, and go to the task of Manage Sub-Ledger Accounting Lookups. Under that particular task, one need to search for a lookup type, ORA XLA promotional options. Once searching that, they have to define a lookup code, which is XLA promo 31776850 ON with the enabled checkbox as checked. Once this is done, this particular feature is available to the user, where if he creates the create accounting process, it will not post the sub-ledger entries, but just directly transfer the entries to the general ledger. This is a screenshot of the particular lookup code, which is checked to enable this feature. Now the seventh update is coming from the area of payables as assignment of exception categories to the payable exception. So this particular change has been done in the payable exception report, where a particular column has been introduced with the which is exception categories. Now this particular categories categorize the payables exceptions into business rule, configuration, tax calculation, and transactions, where business rules refers to if there are any exceptions that are related to organization policies, Example, matching hold and any other type of hold. Where configuration category is if there is any missing setups that has triggered the payables exception, that can be categorized as configuration. Then there is the third one, which is tax calculation. If there are any errors related to tax calculation and the payable invoice has gone into exception, that will be categorized as tax calculation. And transaction, where there is any particular missing placeholder which has not validated the particular invoice, can be categorized as transactions. Now, these categorization will help the reviewer of this exception report to determine that what particular person can handle that particular exception. Suppose if it is a configuration categorized issue, the reviewer can directly send that particular issue to the administrator to look into that particular one. And if it is a transaction related categorization issue, it can send to a end user who has created that transaction to correct that transaction. So this particular categorization helps to improve the overall efficiency of the process. Now, this is an example of a payable exception report where you can see a second column as exception category, which is categorizing the particular exception. And likewise, while running this particular payable exception ESS job to take this particular output, one can have a parameter of exception categories where they can filter the particular exception category to report. Now the next update is again from the payables, which is IDR supplier derivation in email subject. Now, by this 24A update, while having the IDR, which is the scanned invoice, supplier can send their attachment in the email with the subject prefix as their supplier number within the parenthesis. This will have a faster impact in recognizing a particular supplier while having the scanned invoice import. So now onwards, if a supplier is sending any particular invoice attachment, they can provide their supplier number, which can be provided by business to those suppliers in the parenthesis as a subject, as a prefix. Then that will help that particular process of identifying that particular invoice more quickly in terms of import of such invoice into the Oracle. In order to get the supplier number, one can navigate to procurement, then navigate to suppliers. In the task panel tab, click on manage suppliers, and in the keywords field, if one can find the supplier, they can see a particular column which is known as supplier number. That particular number can be provided to supplier to provide that in the subject of a mail. Now there are certain points to note for using this functionality. One of them is supplier must provide the supplier number within a parenthesis in the subject and enter the supplier number as a prefix in the email subject. Now, it might happen that a particular email subject can contain a prefix as FW or RE. Now, Oracle is smart enough to ignore these particular prefix, and it will only take into note that particular supplier number as a prefix, which is available in the parenthesis. Now, there is an order of precedence in order to recognize a supplier. First of all, if an attachment of an invoice is a PO link invoice, then the Oracle can identify the supplier taking into account the PO number. So the PO link supplier can be identified. If an invoice is not a PO link invoice, then it will check for a subject which is having a supplier number. If a supplier is not having any subject with the supplier number, then the Oracle will check its name, address, and other identifiers in order to identify the supplier. Now, there is one more update from the payables, which is performance improvements to the payable hold info tile. By this particular update, Oracle has provided a performance improvement in the hold info tile to capture the information more quickly. Now, by introduction of that, it has also provided the count of invoice hold over 7 days, 15 days, 30 days, and all days. This particular update will improve the overall efficiency of getting the information of the invoice holds generated by the creation of the invoice by the end users. Next one is coming from the payment area. Employee bank account creation using a unique bank identifier. Now, in most of the regions of the world, the bank and a branch can be identified using a particular unique combination or a unique bank code, which can be termed as uh, a rounding number or a IFSC code in some of the areas of the world. Now, to enable this particular feature, one need to provide a profile option, PE use existing bank branch as yes. Once this is done, while adding the bank account by an employee for its expenses, they can just choose to have a particular rounding number or a unique bank identifier code that will automatically determine their bank and branch combination within the Oracle setup. This is a typical screenshot which can depict that a particular employee can choose to have search item using rounding number or search using IFSC code. As per the countries which are selected, the nomenclature changes, and they can use this particular option just to select their particular routing number that will automatically determine their bank and branch combination. So they do not have to provide any effort to search for their bank and branch. They just need to select their rounding number or IFSC code in order to get their bank and branch detail. Next update is from the areas of assets. Total cost display for a parent asset addition lines in the assets. Now, one can have an additional column at the additions info tile page where they can have a merge cost of their parent assets. Once, if they can select that parent assets, they can even get the insight of the merged lines, which has contributed to the creation of that parent asset. And there can be also a case where the invoice has been imported to get the cost of the asset, and that particular thing is available in the prepare source line area. So this particular column is also available there just to have that information of merged assets cost. Next update is from the area of expenses. Audit evaluation of resubmitted expense report for potential duplicate. Now, this has been introduced for cases where an employee submits an expense report, then it withdraws the same, and then resubmit the expense report. In that particular case, the audit area identifies a potential duplicate items if there are any available in that resubmitted expense report. This particular feature provides auditor with the most current list of potential duplicate expenses, streamline the overall audit process, and reduce the risk of non-compliance. Also reduce the potential overpayments, which can happen due to duplicate items being overpaid to the employees. So these were the quick wins. Now we will start with not a quick win, which means that requires a significant amount of configuration in order to avail that functionality. First one is coming from the area of receivable, which is electronic invoicing enrichment for legislative updates. Now, most of the legislative throughout the world requires certain amount of fields from the receivable invoice that needs to be captured on the e-invoicing as per UBL 2.1 e-invoicing messages. So Oracle has enhanced certain fields to be available in the XML template, which can be taken into account while designing the invoice format for sending the information across the creation of the AR invoices. Now these details are listed in upcoming slides, which is from header it can have transaction source, accounting date, notes, FOB, exempt from late charges, default exception handling, print date, attachment title and description, payment status, product type. Just to provide that these are the additions to these items. There were already certain items which were available in this list. Oracle has just enhanced some more items via this particular update. Similarly, there are certain items from line details, text line details, memo line details, bill to customer details, which are listed on the slide. Similarly, there are also areas from ship to customer detail and paying customer detail. And there are certain elements which has been incorporated from legal entity details, legal reporting unit registration details, bank account details, bank account assigned legal entity details. So these are just the listed items. We are not going into the detail of each and every item which are listed in the XML template, but these can be extracted and can be used while creating the invoicing. So there is a process to generate the UBL 2.1 e-invoicing messages, which is create the receivable transaction with all details, then run a particular ESS job, which is generate and transfer XML transactions process, and then go to the message collaboration message handling history page and open the original extract message and the transform UBL 2.1 message. Now there are certain steps to enable this particular feature. One has to go into the setup and maintenance and search for a task manage receivable node type. Under that particular task, search for a lookup ZMM node type, and while having searched that particular lookup, define a new lookup code which is AAI and have that particular lookup code as enabled with a description FRBT21 and just save that particular lookup code. Then again navigate to setup and maintenance, then navigate to manage receivable node type mapping. Now select the receivable transactions as business object and just provide mapping of the lookup code which was defined in the earlier task as AAI and define the default as whether yes or no. Once we have this setup, all these particular features which has been introduced by this update for XML template will get available. Now, there are certain points to be kept in mind. First is that one has to run the ESS job generate and transfer XML transaction to get the receivable transaction transformed into UBL 2.1 transform messages. Second one is that the output file containing the XML file header, invoice header lines, and invoice tax details and additional invoice information is specific to the transaction. So once this particular process has been run, so only that particular transaction details will get transferred into the XML. Another update is from General Ledger, which is opening balance initialization for new reporting currencies and secondary ledgers. So this is for the businesses which are currently having their primary ledger, and by utilizing their primary ledger, after some time, if they decide to have a secondary ledger, in that particular case, they have to migrate their current period balances, which is the starting period of the secondary ledger, to the secondary ledger in order to have the balances updated in the secondary or reporting ledger. So this was done earlier through a manual migration process, which Oracle has introduced now with an automation process. Now one just have to run a particular scheduled job and provide a period, source ledger and the target ledger, and then that particular balances from the primary ledger can be transferred to the reporting ledger as well as to the secondary ledger. Now, there are certain steps to enable this process. One is that enable the balance initialization for target ledger by selecting the pre-populated balance initialization period during the setup of new secondary ledger. So if you are creating a new particular secondary ledger, you have to select this particular checkbox and you have to provide the initial period. Ensure that the user has a right access to the target ledger. So the person which is running the ESS job should have a right access to that target ledger, which is the secondary ledger as well as the reporting ledger, whatever the case may be. Initialize the balance by running create opening balance journal in reporting currency or secondary ledger process. So this is the ESS job that a user has to run. in order to transfer the balances from primary to secondary or reporting ledger. While running that process, they can specify the source and target ledger, and they have two optional parameters, which is create journal batches by primary balancing segment value, and another one is account filter in case if they want to transfer the restricted account balance to the secondary ledger or a reporting ledger. One update is again from the receivables area, which is third-party tax registration number defaulting for receivable transaction. So from this update, Oracle has come up with the defaulting of third-party tax registration number at the transaction. So one can see that particular default option available while creating the AR transaction. Now, in order to have that default, it has an order of precedence, which is like at the customer master level, one has to provide the third-party tax registration number at the bill to site level. If at the bill to site level, third-party tax registration is not found, Oracle will look the same as at bill to party level at the customer. If the same is not available there, then the Oracle will check ship from country available within the bill to party site, or ship to country, or legal entity, or bill to country of the bill to party site. If these details are even not available within the bill to party site within these four areas, then it will go to the bill to site, sorry, a bill to party, and then again check for ship from country, ship to country, legal entity, and bill to country. If it is even not finding that particular third-party tax registration number at all these places, then it will not provide any particular third-party tax registration number at the AR transactions. Now, in order to enable this feature, one has to go into the task called legal entity tax profile and has to enable a checkbox of assign third-party tax registration number during receivable transaction creation. If this checkbox is checked, then only that particular field is available at the AR transaction. Now, these were the not quick wins. Now we will be discussing for quick wins opt-in, which means that these features are available if one is going to have enabled these features. First one is from the area of lease accounting, which is end of lease processing for revenue leases. Since we know that revenue leases are something which Oracle has came up in their recently latest updates previously provided. So right now for revenue leases, there was no provision of terminating the lease within the lease tenure. So one has to wait to the end date of the lease in order to terminate that lease. But now from this particular update, Oracle has come up with the option to terminate the lease, which means a lease can be terminated within the duration of a revenue lease, anytime in between. So once a person is selecting this option, they have to provide the termination type, effective date, prepared by, and the note to terminate that particular revenue lease. This option is right now available to enable from offerings, but it will no longer available from the update 24D. So after 24D, one do not have to enable this feature. This will be available as a default feature after that particular update. Second one is also from the lease accounting area, which is again for revenue lease contract. This is for import and its conversion. Since till now for revenue leases, since this is a new feature available from the recent releases, so there was no provision of importing the same from an FBDI. But now from this particular update, Oracle has introduced an ESS job. So now one can have this particular revenue lease import from FBDI, and they can run a process called process properties and revenue lease actions, which will import the revenue lease not only for new revenue lease, but for any amendment to the existing revenue lease already created in the system. So these are the typical screenshot, which can provide the detail of importing this particular process. where they can select the action type as import revenue lease and subtype as either new lease or lease amendments. Now, another one, which is the last update, which is from the assets area, which is segregation of asset transaction entry and transaction posting duties using a spreadsheet. Now, from this particular update, the Oracle has provided a feature where it can have a maker and checker effect for creating the assets using these spreadsheets, where it is providing two duty roles, which is transaction preparer and transaction reviewer. The transaction preparer can just create the asset in the spreadsheet, but he has no right to post that asset to the asset book. Whereas the transaction reviewer can edit the transactions which are created by transaction preparer, as well as he can post all the transactions to the asset books. Now, these transactions typically include asset addition, asset adjustment, asset transfer and retirement, as well as the revaluation and impairment. Now, this is just an example of a sheet, the FBDI sheet, sorry, ADFDI sheet, which is used for creating the new asset. You can see that it has contained the status as new, post, on hold, where you can see at the last 4 lines, which is it is having a status as review. That means a preparer can only provide the status as review, but cannot have a status as post while creating these additions. Whereas a particular person who is reviewer can actually post these assets. Now, there are certain steps to enable this particular process. First of all, one has to go into offerings, financials, use the opt-in for the segregation of the asset transaction entry and transaction posting duties in the fixed assets to enable this feature. So that feature is available in setup and maintenance financial, change feature opt-in, financial, edit feature, and then one need to select the segregation of asset transaction entry and transaction posting duties. Now, once this particular feature is enabled from this opt-in, there has to be created a custom role, which can be created using copying a job role, which is asset accounting manager, and a duty role known as fixed asset transaction management. Within the duty role of fixed asset transaction management, one has to remove certain privileges, which is FA post fixed asset online transaction, FA post mass addition fixed asset financial transaction, FA post mass fixed asset retirement, FA post mass addition, FA post mass fixed asset assignments. So all these particular privileges are related to posting. So since this particular duty role related to transaction preparer, which shall not have the post privilege, so we are removing all these post privileges from the duty role, and we are assigning that duty role to the custom role which has been created copying the fixed asset transaction management. Similarly, for transaction reviewer as well, we have to create a custom role, which is created after copying the asset accounting manager again, and a duty role known as custom asset transaction review duty, which is created from a copy of transaction review duty, and where we need to add certain privileges, which is FA view fixed asset addition, FA view fixed asset adjustment, FA view fixed asset transfer, and FA view fixed asset retirement in order to view that particular details. Now, to enable the profile option for performing the impairment, now for the earlier setup was just related to addition part, but in order to even enable the impairment transaction, one has to select for certain profile options, which is available in setup and maintenance area, where a user needs to go to manage profile option page and search for profile code FA impairment preparer. There he needs to enable that particular profile code, and in the setup and maintenance work area, then they again have to go to another task which is known as manage fixed asset profile option, where they need to search for another profile option which is FA impairment preparer, and add the transaction preparer user to that particular profile option and set the value to Y. Once this is done, This particular feature is also available for performing impairment transaction. So this is the example of the task manage profile option, where user was searching for FA impairment preparer and was just checking the enable and updatable feature as a checkbox against user or a product or a site. Now, once that setup has been done, they have to go to another task, which is known as fixed asset profile options, where they again have to search for profile option code FA impairment preparer, and they have to add the username who shall be performing the impairment task. So thank you all for patiently listening till here. Now I'm just handing over to my colleague Sachin. So Sachin, over to you.
Thank you, Vivek. Thank you for the wonderful insights. And as we have seen, there is a lot of impressive features came up in 24 Oracle Finance Update. Okay, so one important message which we would like to convey to all that if you would like to enable Redwood pages for any of the module, or if you need any further assistance on the Redwood pages, you can certainly write to the Mastic support managers and they will be able to arrange the required support. And you will receive an email by next week wherein presentation and session recordings would be available to you at a single click. Okay, so these are the upcoming session which you can see on my screen. So please register or ask your colleague to register and be a part of this webinar, as we have aligned talent and OLC on 30th Jan. For supply chain management, inventory and order management, Oracle updates is also aligned on 30th Jan. HR help desk and ORC Oracle quarterly updates 24 are aligned on 31st Jan. And if you have any issues or any concern regarding this, so please post your queries or shoot or email to our official email ID, that is csoperations@mastic.com. We are serving round the clock to serving our global customers. So before you leave us, we would like to have a quick feedback on today's session by launching a poll. So I'm launching a poll on your screens right now. Okay, so thank you once again. Thank you for valuable time. Bye.